Despite the fears around Delta and the Delta variant, we're getting another day of rally, and it's a pretty broad rally. And most importantly, we've recouped the losses of the aggressive sell-off we saw Monday in the broader indexes. We haven't seen a full recovery in the price of oil, but we've seen more than a recovery in the price of energy stocks. And this is what I view as a turning point. We are now finally seeing energy stocks outperform kind of the price of energy. We saw that particularly on the crash. We saw that yesterday when the price of oil was only up 1 and some change. Today, the price of oil is up 4%, and it's really hard to beat that. That is one heck of a rally. But we also had one heck of a sell-off on Monday with it down 8%. And I think this is highlighting what we thought the cause was. Something to do with paper trading, not necessarily supply-demand dynamics. Lots of businesses have been saying that they're not seeing any change in anything. So it really was just paper trading. And maybe the paper traders came back in today, or there was less of them because they all sold their stuff on Monday and businesses saw the price coming back and figured, oh, there's not going to be a lot more time. So, yeah, it's just normalizing energy market, which is a good thing. Hopefully we'll see that in energy stocks. But I'm not suggesting that it will be normal to see continued 4% days. Yes, energy's had a very good run, and yes, it looks like it's having some sort of 4-5 month trend going, and I wouldn't be surprised to see that continue. But a 4+% day is pretty big. So, Tom Lee has coined this notion. I believe he's coined it, but it's a very good notion, and I attribute the coining of it to him. That stocks, and I guess we can extrapolate that to commodities as well, tend to have 10 best days. And you don't want to miss these 10 best days, because if you miss these 10 best days, your total return is dramatically affected. So take that notion and apply it to your overall investing philosophy, in my opinion. But I want you to take that notion of energy right now. So we don't know when the next of the 10 best days is. We assume one of them was today. But, we don't think that there's going to be a whole lot of them, So it happens today. The next couple days, maybe it's chilling for a little bit. Maybe it's down a little bit tomorrow. Let's not get spooked by that, and let's keep holding until the next 10th best day, right? We want to wait for that next 10th best day. We're waiting to stack the 10 best days and keep pushing. Energy stocks, many of them, trade highly correlated to the price of energy. Now, the price of energy is higher than when many of the energy stocks peaked, particularly the energy services stocks, OIH, SLB. They peaked on June 4th when Apple began its rally. Now, on Friday, Apple saw its largest drawdown since June 4th. My assumption that I said on the Friday before July 21st video was that trend was going to reverse. Today we see energy up big, we see Apple down. Maybe that'll continue, and interest rates begin to rise. So I think that should occur. It sounds like Delta fears are going to be pushed aside for now. That's going to allow reopening stocks to return, rates to rise, and energy stocks to continue to do well. And it seems that June 4th was when Delta concerns began to set in, because energy peaked then. Rates continue to fall. But most importantly, the price of oil did not fall. So the price of oil on June 4th was around $69 a barrel. It continued to run up into $77 a barrel, just by general supply and demand. Again, businesses weren't necessarily seeing or fearing Delta at the time. They acknowledge it as a risk, but they hadn't been seeing in the data, as JP Morgan had said, and I'm sure they've asked a lot of people a lot of questions. Yet the price of energy stocks continued to fall as the price of energy continued to rise. So given that they're historically correlated, they have that much room to make up because the price of energy is now $70 a barrel. OIH was $240 on June 4th. It's now $195-ish. That's more than 20% upside. Exxon has been around 67, if I remember correctly. It's something like 57 right now. So there's a lot of upside here, and it looks like the price of oil may continue to rise. So let's see what happens. It looks like the dynamics are pretty good, and we just got to stick to the fundamentals, stick to the script. And when we have a significant deviation from the fundamentals, like we had seen earlier this week, and obviously didn't feel good, it felt painful, and I'm sure a lot of people wanted to sell based on the text I was getting. A lot of people were fearful of just grabbing their cash and running, but clearly it looks like that was the wrong move because you would have missed the up to 10% move in 2 days. So we really have to see what happens. And we'll see what happens. I expect energy to return where it should be given the fundamentals. And that means stocks like OIH back up to 240 and Exxon back to new 52-week highs. Energy stocks back to new 52-week highs. That's where I think that market's going. Tom Lee likes megacap tech. I think megacap tech does do the inverse of energy as we saw on that crucial June 4th date. That said, I've been hating on megacap tech like basically all year, and it had that rally that I didn't see coming. So we'll see what happens. So until next time, peace out.